please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back to our coverage of the monetary policy, straight here from the Reserve Bank of India headquarters. Well, it's a fairly simple policy. It has cut interest rates or the repo rate by 1/4 percentage point. There is no promise of a further rate cut, nor is there a warning that there cannot be a rate cut. The way in which it is worded, it looks pretty neutral. If inflation were to surprise on the downside, one wouldn't be surprised if the Reserve Bank came in with another cut, but then inflation would have to substantially surprise on the lower side for another cut to come in. And yet, for the moment, the Reserve Bank has delivered on a cut. Let's invite Sunil Munjal, a man who understands consumer finance better than anyone else. Mr. Munjal, good afternoon and thank you very much for joining us. Given the 1/4% rate cut from Reserve Bank and that giant 0.5% deposit cut from SBI, chances are that money will be a little cheaper for those who want to buy a two-wheeler. How are you assessing demand and growth from here on?
So one thing is clear, that this economy deserved a rate cut. I think for many months now, economists, government, industry, financial experts, everybody has been saying that every indicator is clear, inflation is down consistently, there is no fear of inflation jumping up unexpectedly over a short period of time, and we have slowed down on the overall industrial growth. We've actually shrunk, the growth itself has shrunk over a period of time, and it is clear that lending is down, so that every indicator was clear that it deserved, frankly deserved a higher cut than we got. 25 basis points is welcome, but 50 basis point is what was quite justified right now. And industry associations, CII, FICCI, everybody has been clamoring for this for a while. I'm actually surprised it's taken so long. It's good for the Reserve Bank to be conservative, as they should be, but beyond a point, it actually starts to hurt. And we've seen that this is not a time when the economy is buoyant. The large chunks of money that have come in to move the projects forward is either public sector or foreign money. Indian private sector is still quite hesitant. So I think this is more than welcome, but also overdue.
Okay. No, I just wanted to know whether your own consumer will be more willing to buy motor scooters or two-wheelers. The point I'm making is that, you know, the Reserve Bank may have been conservative in the way in which it has cut, but actually it has left a lot of cash with the banks in the interbank market. So yields, I mean, people are able to raise CPs at 6% yields, sir. Things have become somewhat cheap. How is demand now at the current cost of money? I'm only referring to consumption demand.
Sure. So it's actually at a very interesting stage right now. It's been a slow period for a while, as you know, but the demand turnaround is very clear. It's visible. Since you talked of automotives and two-wheelers and automotives have seen a very smart growth in the last month, but a lot of it is attributed to the price cutback due to the GST impact. Most companies passed on all of the GST impact in terms of pricing to the consumers, and that created a spurt in demand, and there was also a latent demand because of deferred purchase decisions by customers for a long time. So a rate cut there is very, very helpful because the majority of these products are actually sold on financing. So your point that you're making is very, very valid and very relevant, which is the reason when I started, I said a bigger rate cut was highly justified at this time to kickstart the economy, because this is an entire cycle you need to move forward. Once the consumption picks up, productions will go up, and once production go up, the unutilized capacity gets consumed, and then industry goes back into an investment cycle, and thereby creating a virtuous cycle of growth. We are still a step or two away from there, but headed in the right direction for sure.
Okay. So at the moment, what is the cost of finance for someone who wants to buy a two-wheeler? Is it about 9% or is it even less? And if it came down by another 0.5 percentage point, do you really see a big spurt in demand? And the second question, what is the slack in the system? How much more should demand pick up or capacity utilization increase before we expect investment? Is industry at 70% utilization, 80% utilization?
So Latha, I'm not the right person to ask about the two-wheeler business. That's something you should ask Pawan or some of the others in the system.
I'm asking you generally about industry.
Yeah, I can tell you overall, it is clear that the capacity utilization right now in the industry, and this is across the manufacturing industry, varies from 60% to about 75%. There are of course exceptions. There are some companies who've gone up over 90%, but those are very, very few. And there are some who are laggards at below 50%. But the bulk of it at this moment is varying between 60 and 75%. So there is headroom at this moment for consumption to grow. So if it had dropped instead of 25% by 50 percentage points, 50 basis points, it certainly would have helped more. Now, how much it would help, that's a speculative thing. I don't want to speculate, but it's clear that at this moment, consumers are looking for signals and an indicator that there's not going to be a further slide down in the overall system, that we can start and hope to see a turnaround. That's when purchase decisions get made, especially big purchase decisions like automakers, buying new homes, because these are two industries which have the largest multiplier impact on the economy. Home buying has slowed down itself. There is 38% drop in new project announcements in the last 3 months itself. So you need to look at 3 or 4 indicators to figure out what's happening to consumers, industry, and therefore the economy.
Okay. Well, just a final question. Assuming that the cost of money is at current levels, that consumers will be able to borrow at about 8.5 to 9%, where do you see the industry reaching 80 or 85% utilization? Is it by end of this year? Is it 12 months from now? 18 months from now? What's your very broad guess?
Again, as I'm saying, this is speculative, but what it looks like is this will be a year of full consolidation. Next year looks like will be a year of full consumption growth. So I would hope and imagine that companies will come back next year and start to invest and start to grow their businesses.
Okay. All right, sir. Thank you very much. Coming from you, that's very important. A pick up in capex or a fuller utilization of current capacity is about a year away. Now, that's a very important giveaway in terms of what we should be planning in terms of earnings growth in the current year itself. But let's get the two money men, one who is a big lender, another who is both a borrower and a lender. We have Mr. Manian of Kotak Bank and Mr. Revankar of Shriram Transport. Mr. Manian, to you first. What is the key takeaway? Do lending rates get cheaper in the system? I would assume deposit rates as well.
Yeah, with the liquidity that we are seeing in the system, I think the direction is clearly downwards. And this policy rate cut, while it was expected and probably part of it was already anticipated and discounted by the markets and acted upon by the markets, but I think this also pushes the direction down. Having said that, my own sense is you'll see some uptick in inflation is what we think from here, and therefore too much further downward movement of interest, probably we are close to the bottom. Too much further downward movement of interest is unlikely. Some downward, yes, movement, yes, but not too much.
Okay. No, so what are you saying in terms of what we will hear from banks over the next 30 days? In fact, over the next 2 weeks itself, one big giant has moved already the savings bank account rates cheaper, and you have, of course, the policy rate cut as well. So RBI and SBI have moved, so to speak. Should we hear a spate of term deposit cuts and lending cuts in the next 30 days?
Yeah, like I said, there will be some deposit rate cuts and followed. I mean, obviously, if there is a deposit rate cut, there will be a lending rate cut as well. Some marginal cuts, yes, I think we will see. But like I said earlier, deposit rates have moved already significantly down. So have lending rates significantly down. So I think there is some scope. I don't think it's a huge, big scope from here.
Okay. Okay, not big, I agree. But if you had to pick up a Shriram Transport debenture or, any other MMFSL, Bajaj Finance debenture, chances are they will yield about 25 basis less in a month?
No, I don't think so. I don't think so. I think markets had already discounted this rate cut. Markets had already discounted these rate cuts, and the rates had moved in anticipation already. So from here 25 downwards, no, I don't think so.
So at all downwards, or are we done and dusted?
No, I think, like I said, there is some downward movement possible, but not 25.
Okay. All right. And just finally, any other takeaway that I missed? There was a set of public registry, tripartite repo, bond repos, and such other announcements. Even LCR, liquidity coverage ratio announcements look like, you will have to buy less bonds for your liquidity coverage ratio. Any other key takeaways from the policy?
No, I thought his language is quite important. I think from his language, the reading I have is that from here on, inflation data will be extremely critical, and for him to further cut from here. And therefore, at least our anticipated inflation trajectory is that it doesn't go down from here, it probably inches up slightly from here. So I think any rate cuts from here are going to be extremely data driven. Or inflation data driven especially. That's a reading I got from his language in the policy. Otherwise, I think most operational ones that you said,
Yes, go ahead, please.
Sorry. Yeah. Otherwise, the operational ones, like you said, yes, LCR may be slightly better. It might reduce, have some small impact on cost for banks. But by and large, I think it was not that this policy had clear focus only on one item. There weren't too many items to read in this policy, in my mind.
Fair enough. Thank you very much, Mr. Manian, for joining us. And now to Mr. Revankar. Mr. Revankar, the takeaway from the banker is that if you were to float an NCD today or in the next 1 month, the yields are not going to be much softer. Maybe a little softer, definitely not 0.25 percentage point. Is that your takeaway, or do you think, no, there is enough in the policy and in the liquidity to expect yields to dip?
Yeah, we do feel that there is enough liquidity, and the bond yield should come down further because we see there is enough liquidity in all the banks. So I feel the transmission has to happen. And unless the transmission happens, there is no further incremental demand coming from the credit.
Okay. You mean at say at 20 basis points lower, 15 basis points lower, demand will pick up at all? Freight demand?
Yes, it's basically the expectation and stimulation, because from when you have an expectation and some stimulation to borrow money or take a credit, then lower rate or at least announcement of lower rate helps sentimentally to plan, because you have to plan. You plan 3 months ahead, 6 months ahead. So some indication has to be there. If it is a very small incremental, then you don't feel it. So I personally felt that 50 basis point would have created a stimulation in demand. So right now 25 basis looks like a small step. So to create a stimulation, it is very much important. Then automatically there will be a flow. There will be a flow for demand. So credit demand comes because of the activity which is pre-planned. So people have to start planning and come out and start either spending or borrowing. So that is now I feel it as a little slower. But having said and done, the inflation issues, like challenges like supply chain issues are there because of the GST. Things are not really moving smoothly, because many of the people at lower end are not connected with the GST. So I feel there are some issues on the supply chain. So once that is sorted out, probably the flow will be much better. The inflationary tendencies or inflation indications are clearly understood. Right now it is not understood. There could be some supply chain issues and prices are likely to go up a little for a short period. So these challenges are there. I think once that is addressed, it is definitely not related to food. It is only related to manufacturing and the supply side.
Okay.
So once that is addressed, probably RBI will be more clear.
Okay. One very quick question. In your estimate, when do you see a quarter of growth? Will that be, Sunil Munjal just said that there is so much slack that for a year he doesn't expect people to even start any capex plan. Your hunch as to when you will see your own demand take a quantum leap?
For us, demand comes out of consumption. So I feel the consumption demand will immediately go, that will start from October during the festive period. Okay. So October, November should be the time where the consumption will start. But for the investment in additional capacity, it may take 6 months to 1 year time, because it has to exhaust. The existing facilities need to exhaust and near to come to a limit. So I think, but the consumption demand is definitely likely to improve from October onwards.
All right. Thank you very much, Mr. Revankar, for joining us. Well, the key takeaways seem to be that it is an uneventful policy. There has been a 0.25% cut, but that was on expected lines. Bankers and non-bank finance guys are maximum expecting maybe a 15 basis point cheaper money, that is cheaper for deposits and cheaper lending rates, but not much. Even a 25 basis fall in the cost of money is not expected. So basically we return to life as usual. 25 basis not enough at least to enthuse consumers to come up and consume more, and capital expansion is at least 1 year away, is what Sunil Munjal had to say. Policy done and dusted. We take a break on that note. We will come back with more news and updates.